Hi there, it's me again, Christine, your auditing theory conversation partner. And today we're going to strike a conversation about audit sampling. Now, I don't know about you, but for me, in almost every classroom that I walk in on, whether it's in the undergrad or in the formal review or even in online classes such as the one we're having now, audit sampling seems to be a crowd favorite. And by that, I mean it's one of the most requested topics for discussion. So here we are. We're finally going to talk about audit sampling. And as we do that, let us, of course, visit our audit risk model. Now, you might notice that in almost every discussion that we have, we always anchor it to the audit risk model that just shows you how important this model is. Of course, at this point, we already know that audit risk is the risk that the auditor gives an inappropriate opinion on the financial statements. This is what reinforces the fact that we are only giving reasonable assurance. In other words, the audit is not perfect. Okay, while we give reasonable assurance, it is not absolute assurance. So we cannot guarantee with utmost certainty that the opinion we are giving is correct. And that is, of course, audit risk. We also know that audit risk is made up of the following components, starting, of course, with the components which are uncontrollable by the auditor, and we call that the risk of material misstatement, which is made up of both inherent and control risk. Now, we are saying with or without the auditor, the risk of material misstatement is always there as it exists outside of the audit. And to complete our audit risk model, of course, is detection risk, or the risk that the auditor's procedures will not be able to detect a misstatement that exists in an account balance or in a transaction or in an event. Now, at this point, allow me to point out to you that when we look at the audit risk model, we're actually referring to the desired level of audit risk and the acceptable level of detection risk. Now, attaching that phrase, acceptable level of detection risk, reinforces the fact that detection risk is the only risk that is controllable by the auditor. That is why we can dare say this is my acceptable level. We can never say this is my acceptable level of the risk of material misstatement because those two, inherent risk and control risk, we can only assess them. But in terms of detection risk, we can actually control the acceptable level of detection risk. And dare I ask how? I'm sure you know the answer already, by tweaking the nature, timing, and extent of your audit procedures. And this is exactly where we are now. We are going to talk about the extent of the audit procedures. Now, for most of us, we might think that audit sampling is the only way to go, but actually, that is not true. In fact, the auditor may choose from performing either a 100% examination, specific items, audit sampling, or a combination of all three. That being said, yes, you have read it right. It is possible for the auditor to test everything. It's possible for the auditor to test every single item in the population. However, this is not very common because I think you could already imagine not only will it be too costly, but it would also take a lot of time. But there are, however, some instances where a 100% examination is appropriate, such as when the auditor has deemed it to be cost effective. It may be cost effective in scenarios such as, for example, there are repetitive automatic processes, or perhaps the data is stored in digital format, and it would be easy for the auditor to test 100%, especially with the use of computer assisted audit techniques. So, in that case, the auditor may decide to test everything. Another is when other means do not provide sufficient and appropriate audit evidence. That means to say, when the auditor has decided or upon his judgment sees that, well, audit sampling just won't cut it. Specific items just won't cut it. I need to test 100% for me to get that level of assurance that I desire. Then, of course, by virtue of that, you have no choice but to test 100% of the population. The auditor may also want to look at the characteristics of the population, such as, for example, if the population is made up of a small quantity of large value items, like if there are only 5 items in the population and each item is worth 1 million pesos or 1 billion pesos, right? So in that case, it may be more cost efficient for you to perform 100% examination. Lastly, this may also be appropriate in the case of items which we consider to be significant risks. Now, we already know that previously significant risk has been defined as those risks which the auditor would pay particular or special attention to. And in the recent revisions to our ISA 315, we know that these are the risks on the upper spectrum of probability and impact in terms of inherent risk. So when the auditor identifies significant risks, it may also be appropriate to perform 100% examination. Another option for the auditor is to test only specific items. And by this, we mean that the auditor will set a specific threshold or a specific criteria and will only test those items. For example, this may be appropriate in cases of high value or key items, like the auditor would perhaps say, test all sales transactions amounting to 100 million and above. Okay, so mean to say the auditor will only test those items of 100 million and above. So those items which do not reach that figure or that amount will have no chance of being tested based on that example. So when the auditor wants to test high value or key items, or similar with the example that we've given, all items over a certain amount, or for items intended to obtain information or items intended to test control activities. So these are scenarios or situations where it may be more appropriate to use specific items. Okay. And the third one, which is of course going to be the very meat of our discussion for this lecture series, is audit sampling. Unlike specific items, in audit sampling, there is no set criteria, or the auditor does not set a threshold or a filter. Okay. It does involve testing less than 100% of the population, but take note, under audit sampling, all the sampling units have a chance of selection, unlike specific items where they need to meet specific criteria, right? In audit sampling, every unit has a chance of selection. Now, audit sampling may be used for test of controls, for substantive tests, and even for dual purpose tests, or those tests which can serve the purpose of being both a TOC and a substantive test. Unlike, for example, 100% examination, 100% examination is highly unlikely for tests of controls because of the fact that it's often difficult to identify the population of controls. In the case of audit sampling, it may be used for either TOC, ST, or dual purpose test. So these are the choices of the auditor, but of course, our focus will be all about audit sampling. And for this, we will invoke PSA 530 or ISA 530, which is all about audit sampling. And as a starter, let's take a look at some terms which we will be encountering all throughout our discussion. So let this be somehow kind of like your definition of terms or your glossary, if you will. So starting, for example, with audit sampling, we already know this one. Apply the audit procedures to less than 100%. Okay. An error is what we collectively call deviations or misstatements. So an error may either be a deviation or a misstatement. And when we say deviation, this is more appropriately used when you are testing the controls and you have seen instances where the controls are not met or the controls are not followed. The technically correct term for that is deviation. Misstatements, of course, are differences in what was recorded and what was supposed to be the correct amount to be recorded, and therefore we see this one when we perform substantive testing. Okay, so deviations for controls testing, misstatements for substantive testing, but collectively we call them both as error. Speaking of errors, there is also what we call anomalous error. An anomalous error is an error that arises from an isolated event that has not recurred other than on specifically identifiable occasions. In other words, when we talk about anomalous errors, these are unusual errors or errors which we do not expect to repeat. Okay, that is why they are called an anomaly or anomalous errors. And then, of course, the population. When we talk about the population, this refers to the entire set of data from which your sample is selected. We also have what we call the process of stratification. Stratification is when you divide the population into subpopulations, each of which is a group of sampling units which have similar characteristics. In other words, if you talk about stratification, this is a homogeneous grouping. And perhaps if you had a basic statistics class in the undergrad, your teacher must have given an example similar to like perhaps you will have an entire university and you would like to stratify it according to the colleges. So you will have College of Commerce, College of Arts and Sciences is also one stratum, College of Nursing is another stratum. Perhaps your teacher has given you that example. So if you would notice, the grouping would involve homogeneous items or items which exhibit a similar characteristic. The process of stratification is done in order to reduce the variability of the items or the variability of the units or items in the population. Okay, so that is stratification. Another, of course, is sampling risk, and we'll be talking more about sampling risk in a few. This is the possibility that the auditor's conclusion based on a sample may be different from the conclusion reached if the entire population were subjected to the same audit procedure. In other words, this is the possibility that the sample that you have chosen is not representative of the population. And because it is not a representative of the population, then there is a risk that you might be giving an inappropriate conclusion because the sample does not actually represent the entire population. So that is sampling risk. Again, if you talk about sampling risk, the problem is rooted on the use of sampling. The problem is with the sample because the sample is not representative of the population as compared with non-sampling risk. When you talk about non-sampling risk, the problem is not with the sample. In fact, even if you perform 100% examination, of course, if you perform 100% examination, there will definitely be no sampling risk, right? But even if you perform 100% examination, there is still non-sampling risk because non-sampling risk arises from factors that cause the auditor to reach an erroneous conclusion for any reason not related to the size of the sample. So in this case, it's no longer the fault of the sample. Okay, so that's non-sampling risk. And then, of course, we have a sampling unit, and the sampling unit would refer to the individual items constituting a population. And later on, this will make another appearance when we talk about the steps we'll perform in audit sampling. Statistical sampling is an approach to sampling with the following characteristics. Number one, random selection of sample and the use of the probability theory. In other words, when you utilize statistical sampling, you would, of course, make use of this sophisticated statistical formulae in order to come up with a sample size and then, of course, eventually to select the sample and to evaluate the results of the sample. Again, more of that in our next few slides. And then we also will be encountering the term tolerable error. Okay, tolerable error is the maximum error in a population that you are willing to accept. Tolerable error, because it's error, okay, can further be called as tolerable deviation rate or tolerable misstatement. Just think about this as the threshold of deviation or threshold of misstatement with which you are still okay. So if, for example, you will say, my tolerable deviation is 2, so if upon testing you found out that there are more than two deviations, then that means it has breached your tolerable error, and so therefore that might be cause for you to revise your decision. So anyway, more of these terms as we go along our discussion in auditing theory. So we're back to this nature, timing, and extent. And let's point out. At this point, let's draw out the fact that actually, if viewed from the context of audit sampling, detection risk is made up of both sampling risk and non-sampling risk. We already know that sampling risk is risk unrelated to sampling, and it results from the fact that the sample may not be a representative of the population tested. Now, more often than not, okay, undergrad students would seem to have a problem differentiating between a representative sample and a random sample. So when we talk about a random sample, it refers to how the sample is drawn. But when you talk about the representative sample in its simplest form, a representative sample is a sample that looks like the population. right? If the sample looks like the population, then it's a representative sample. If, for example, the population is made up of 50% males and 50% females, and there are a million people in the population, and you only got a sample of 10, and out of the 10, you saw 5 males and 5 females, then that means that you got a representative sample. But if the sample that you got was able to show 7 females and 3 males, then your sample does not look like the population. And so, therefore, it is a non representative sample. Now, at this point, you must understand that when the auditor performs audit sampling, his decision is based on the sample, not the population. Why? Because the auditor was not able to see the entire population, right? The auditor was only able to test the sample. And so, therefore, the auditor bases his decision on the sample. So if the sample is not representative, then likely the auditor will give an inappropriate conclusion. Okay. Now, the thing about sampling risk is that it can actually be managed by the auditor. In fact, it can be eliminated by the auditor. How do you eliminate sampling risk? Well, simple. Just don't do sampling. If you test 100% of the population, there will be no sampling risk, right? Because you tested everything. And for sure, the population will look like itself because, hey, it's already the population. So you can eliminate sampling risk by testing 100% of the population, or you can reduce sampling risk by increasing your sample size. So the bigger your sample size is, the lesser will be your sampling risk. And of course, to use an appropriate sample selection method. Okay, now let's go to non sampling risk. And we already know that in the case of non-sampling risk, it's not the fault of the sample. Okay? So, in the case of non-sampling risk, it includes the possibility of selecting audit procedures that are not appropriate to achieve the specific objective. And this would, of course, include human errors. Now, a while back, we said if you want to eliminate sampling risk, do not perform sampling. Test 100% of the population, there will be zero sampling risk. However, if you think about it, how do you eliminate non sampling risk? The answer is you can't. Non sampling risk cannot be eliminated. Even if you perform 100% testing, non sampling risk will always be present because it is the possibility of risks rooted in the presence of a human being doing an audit and passing on his professional judgment and applying his professional skepticism. And because human beings are not perfect, in the words of the Filipinos, sapagkat tayo ay tao lamang, so there will always be the possibility of non-sampling risk. You can, however, manage it. You can reduce it, but you cannot eliminate it. How will you reduce non-sampling risk? Well, of course, when there is proper planning, when there is proper direction, supervision, and review of the work, and when there is quality controls or quality management. That is how the auditor could reduce non-sampling risk. Okay, so that's the difference between sampling and non-sampling risk. Now, the next thing that we're going to talk about will be sampling risk. Okay, we're going to put a spotlight on sampling risk and what are the different types of sampling risk. Okay, however, I do think that the video is going to be a bit lengthy if we dive into this discussion. So we are going to continue our discussion on the two types of sampling risk in the next video. So I hope to see you guys there.